I think like these are kind of like stages when the business owners goes through from like the financial functions in their business and how they should approach it. Like I would say, yeah, like it's like you don't need fractional CFO, or you don't even need like a bookkeeper, an accountant until you get
Mhm.
like 10, 15 millions, 15,000 a month like of revenue.
Welcome to the Expert in You podcast, the show for professional entrepreneurs, experts, authors, speakers, coaches, and consultants who are ready to elevate their business, expand their influence, and boost their bank accounts. Join us as we dive deep with industry-leading experts who share their top strategies, invaluable insights, practical tips, and personal experiences to help you achieve extraordinary growth and success. Whether you're looking to sharpen your skills, stay ahead of the curve, or find that competitive edge, this podcast is your ultimate resource for unlocking your full potential. So tune in, get inspired, grab your coffee, and let's unlock the expert in you. Hey everyone, welcome back to another episode of Expert in You podcast. I'm your host, Ann Carden, and I have a great guest with me today, and we are going to have such an amazing conversation around money and business. And Stas Sukhinin, welcome to the show.
Yeah, thank you, Ann. Thank you for having me.
Yeah, so I love diving into the money portion of business, even though we're all in business to make money. But we're going to talk about money in a deeper way. And just so everyone understands what Stas does, he's a chief financial officer, but he does it on a fractional level. So he goes into businesses and he will handle their financials and handle their all the things that go on with the record keeping and all of that. Is that accurate, Stas?
Yeah, it's very accurate.
Okay, perfect. And you basically work with clinic owners. So you're more in the health space and the healthcare space. And typically businesses that are between 3 million and 35 million, and you help them cut waste and scale profitably. So this should be a great show. How did you get into this? You want to give just a little bit of your backstory?
Yeah, I'm luckily find out what I want to do in my life very early when I was 15 years old. I find out about businesses when I first read like a business magazine, and I just like remember it was like, oh, like people making so much money, and I quickly figure out that my first should be in a corporate lending department at the bank, just because I can work with the numbers, understand better financials, and I love financials. And then I can speak with the business owners and can see how they handle business issues, understand better the business side of the business. So, and it's actually what's happened. So I used to work in the corporate lending departments, I start with really, really small businesses, then it's mid-sized corporations, then large corporations. Then I did investment banking, I did mezzanine financing, and for the last 4 years, I was thinking that financials is very easy. And to be
Mhm.
honest, my first degree in physics of semiconductors, and I can tell you it's way more complicated
I was
than
just going to
financials.
say, wow, that's a
Yeah,
big difference. Hmm.
yeah, and it's kind of like it's very complicated. And the level of fundamental knowledge and expertise you need to know before you even grasp like the main subjects is just like no way. And I thought like, yeah, financials is easy. Like everybody, I assume, should know this, right? Like they should be secret. And I still kind of like absolutely kind of mind-boggling sometimes when I speak with the owners and like they don't understand what's happening in their business in terms of financials.
Right.
Like yeah, it's just like it's you can ask like 4 questions, 5 questions,
Yes.
and I basically have understanding how they manage their business from the lens of the financials. Yeah,
Yes.
yeah.
Yeah. So true. So you have a little bit of an accent. Where are you from?
I'm originally from Moscow, Russia.
Okay. I knew you were not probably a US native, but you
Yeah,
are in the US now, correct?
yeah,
Yeah. Okay.
yeah.
Yeah. So I love talking about this part in business because working with a lot of hundreds of business owners through the years, um, I understood too the financials are always an issue, especially when they're smaller businesses. But a big part of that is because they get into business because they're good at their thing. And there's so many things to learn in business, marketing and sales and running teams and the financial side of it. And they're just not experts in all of that. And so a lot of times they are trying to feel their way through or learn things as they go. And that's the reason why so many of them don't understand the financial side of things the way they should. Somebody either has to teach them or they have to do it for them, right? So most of them don't have that background. So especially when you're talking about smaller businesses, or even even a few $1 million, often they have not great record keeping. Financials are often off. Do you find that there's sort of a place where they now do have good financials in place?
I think like these are kind of like stages when the business owners go through from like their financial functions in their business and how they should approach it. Like I would say, yeah, like it's like you don't need fractional CFO, or you don't even need like a bookkeeper, an accountant until you get like 10 15 millions 15,000 a month like of revenue, and then you probably need a bookkeeper. It's like you can find for like 400 just like reconcile transactions. Then, and it also depends on the business, so some businesses easier, but like in my case, for example, healthcare. Yeah, like if you don't work with insurance, yeah, you probably can get rid of like you don't need like a really like even like a bookkeeper until you, I don't know, 500,000 of annual revenue. But if you have an insurance, and if you approach, I don't know, if you like exceed the 500,000, and then you're thinking about to open a second clinic, or like you're thinking about to get a debt, you definitely need a proper accountant. Yeah, it's kind of like, yeah.
Otherwise, you're just scaling chaos and problems typically.
Yeah, and the big like the more I'm inside of this, and now I see like all these moving parts. These are actually two variables that kind of contribute to the massive financials. One is like the clinical, like a clinic owner in my case, like doesn't know what they need to know, like how to look and like what it should be, what it shouldn't be, and so on. But also accountants, they just like they also don't know like many stuff that they have to know, and because they don't know, and they don't understand what the business owners need, like what kind of financials do they need, right? And they kind of like, okay, usually they prepare some financials to file taxes, and that's it.
Just to keep them out of jail and pay their taxes. That's
Yeah, and I would tell like most of the owners thinks that whatever they have like in QuickBooks or other accounting software, that an accountant just prepares for the taxes. They think, oh, I have like the best financials. This is what I hear all the time. Yeah, there's a kind of like a really gap between perceived financial quality, like clinic owners think if they have an accountant that they pay like every month, that they have a proper books, they have a proper financials, right? Like I heard so many times, oh, just like, yeah, I have these books, I just go and click and everything is fine. But it's not gonna be fine. And one thing, as you hire an accountant or a bookkeeper, just reconcile, like every owner should review their books, like they should review it, because there's so many things that an accountant doesn't know, and they either completely miss it, so it's not there like in the books, or like they completely misclassify it. And then if there's a like major, I don't know, you buy inventory, like I know you're a dentist and you buy like a certain things, and if it doesn't count properly into the books, like it doesn't make any sense. Like you can look in your cash flow statement, your profit and loss statements. Everything is just like doesn't make any sense. Like like if I would ask a few questions accountants and know like they don't have a proper accounting of inventory, I would even look at the P&L. Like everything else is just like it's literally meaningless. But some founders, they know like they need to review the like, or at least they looking like at the final results, and they see certain things, and now they're making certain business assumptions, but it's completely wrong, but they don't know it, right? And it's the biggest issue in our industry. Like these are two parties that don't know what should be. And yeah,
I actually love that we're talking about this because coaching and consulting businesses for so long, I would find that they were reliant on their CPA or their accountant to basically kind of give them a business advice, but often accountants and CPAs, no offense to them, but they don't always run the best businesses either. And they would often not give them solid advice, or they would hold them back a lot of times from doing things that really would move them forward. The other thing I would see is, like you said, a lot of wrong categorizing. And I remember I worked with a business owner one time. It was a plumbing company, actually. And he said, my accountant says I have this much money in the bank, but I don't. I don't know where it is, right? And so, but his accountant wasn't giving him any kind of insight as to
Yeah.
how to find that money. And
Yeah.
so, I was able to find it very quickly for them. But that's kind of, you get almost like surface level. The other thing is you get what happened. You don't get anything for the future in most
Yeah.
cases.
Yeah.
So
Yeah.
you have to understand this when you are hiring people for your company to really help you in your business.
Yeah, but to defend accountants, they are not responsible for the future. They are responsible
Right.
to look at the mirror window and say like what's happened in the past periods.
Yes.
But
But the business owners don't necessarily know that, right? They assume that accountant or that CPA is going to give them advice for their future, to grow their business, to do the things that need to be done in their business. And so it's a real misunderstanding, I think, with the
yeah, but
world.
I can tell you more. Like I spoke with so many accountants, and I can tell just because like how like it's probably the most introverted job on earth, and those people they choose these professions for a purpose, right? Like because
Mhm.
it's kind of and they're not really wired to provide advisor service. Like I'm like these are of course there's exceptions. There's like some
Sure.
accountants that become like a CEO, a CFO, like a largest group, like smarter than me, but it's outliers. Like if you look at most of them,
Mhm.
they are not proactive. They don't really understand the business. They're so busy with like running 20 clients and just reconciling all these things in Excel sheets and filing all those reports on time. And they're not really wired to do advisory work. And one of the biggest thing I see the difference between like a fractional CFO, a CFO person, and an accountant, because now a lot of accounting firms start providing fractional CFOs, but they like it just completely. They think it's about preparing a forecast or or giving them I don't know owner like a view what will happen like within the 3 quarters. It's not about that. It's about tell sometimes no to owners or like explicitly tell them what is wrong, like what is wrong with them business, and if they keep doing what they're doing they will end up not in the right place, not where they want. And I can tell account they struggle to have these conversations. They are not wired like they like if you look at
Right.
the job goal, just see the numbers, reconcile, doing like a certain things. They're not even supposed to talk with clients, like or like just ask questions. They're not like really, it's like
They're
they
not advisors really, the way yeah.
yeah.
Some of it, like you said, there are outliers, but yeah, a lot of them are not good business advisors. No
Yeah.
offense to them. We need
Yeah,
them, right?
but the biggest problem that business owners thinks that they're an advisor, right? Like like
Right.
assume that they know about business. Like, but I can tell you, like I know just last week, I interview like five controllers, like financial controllers. Financial controllers, it's one way above the accountants. It's like those people who supposed to review the accountant work and correct or like change something. So they kind of like really on top of the financials, and only one person out of six knew like one like particular financial things that should be in on a balance sheet. They never done it in their career. Like for me, it's mind blowing, and it's they supposed to do. It's not advisory work. It's not like it's not something super complicated. So they should know, and they don't know. And if they don't
Yeah.
know, how like business owners will know about it?
Yeah, no, so true. One of the things I would love to talk about is, you come from the investment world, and one of the things I see is debt versus investment in a business. And you said people often think they need capital and it's not their biggest problem. So I want to dive into that. But then I also do want to dive into when is it good to have debt, and, how to think about that as you're growing and scaling your business, because a business often cannot grow it can't grow very fast if you're trying to do everything from your cash flow,
Yeah, yeah,
especially if you're looking to make big leaps. Yeah.
yeah, it's true. And I think like the first rule before taking any debt, you need to work on your financials again, like because like you cannot take your debt if you don't know like your true margins, if you don't understand what will happen like in 3 quarters, like where you end up, like what is happening with your margins, what's happening with your overhead. Like you cannot do this. It's like, and I highly encourage, like I don't know, like maybe some owners think it's like too expensive like to get the fractional CFO. I bet they spend like on dinner and lunches more. Like there's a you
Right.
at least get like 1 2 hour consultation with a fractional CFO. It will cost you like $400, but you probably will learn so much more about your
Mhm.
business. And I think like I know I like for 2 hours with like with any business owners, I can ask certain questions and I can tell them like if there's something wrong and they need to pay attention and they need focus on auto like and what's happening, because it's just like it's easier, like any experience CFO, fractional CFO can tell you. And I like it's not much money, really, $400, but you will at least like will get some idea like what is
Yeah.
happening, like I like what you're missing, because you don't know what you don't know, and it's the bigger
Right.
picture. And first you need to sort out your financials, like don't take that, because like it's happened so many times. These business owners make this mistake. They, especially when the revenue is growing,
Hmm.
they think like, because they don't have a proper financial, so they don't even look at the financials, right? Like there's a
Right.
bank account review, like when they just log in their bank account and checking like how much money they have, and
Right.
it's how they measure the financial success. If you, before you take that, you kind of understand the picture, then yeah, consider your debt. But sometimes revenue is growing but you don't make any money, but
Right.
you think capital is your problem, like you're thinking that, oh, I lack of capital, but my revenue is growing, business is growing, business is doing great, I just need more capital, I just have like this, like a small issue if I get more capital. But it's probably your revenue is growing, but you also maybe loss making. You maybe on every dollar that you're making in revenue you're losing like, I don't know,
Right. And
$2.
that happens. That
Yeah, yeah,
definitely happens.
and I can
Yes.
tell you, I heard like so many stories. Like I remember one story. I spoke with this gentleman. He was doing consumer goods business for like 15 years, and he was
Mhm.
about to declare his personal bankruptcy. And the one main reason he grew revenue at all cost, just getting more inventory and selling this inventory, but he didn't make any money on selling new inventory, and he just get more debt, and then he just end up that like losses eat out all inventory. He cannot grow revenue anymore. He can't get debt anymore, and that's it. And he spent like 15 years doing this, and it's absolutely horrible. And you can easily solve it, just like, I don't know, get like, I don't know, a few hours of the advisory work.
Hi, friend. I have an exciting announcement. I hope you're enjoying this episode of Expert in You podcast, but I have to ask you, have you checked out the latest issue of Expert in You magazine yet? It's jam-packed with rich content, powerful strategies, inspiring stories, and so much more to help you elevate your business and personal growth. Don't miss out. Go grab your digital copy now and join our community of experts making a difference every day. Go to expertinyoumagazine.com and check out your digital copy today. Transform your expertise into success with Expert in You magazine. It's not just a publication, it is a movement.
Yeah, back to the questions about that. Yeah, first of all, sort out your financials. Make sure that you understand your financials really good, and be very purposeful of how you do you use proceeds from this debt. Like, are you gonna invest in growth? Are you open, like in my case, like clinics, or like, I don't know, new manufacturing or new capacity? Or you just like, I don't know, kind of plug in, like, I don't know, your losses, like how you gonna use it and what's gonna be ROI on this debt money. It's also very
Right.
important. Like if you open a new clinic, like when it's gonna reach a break even, when it's like how much it will start like getting, like what's gonna be the average profit from this new clinic, like is it similar what you have right now, or it's like too optimistic. So be very kind of detailed about the usage of the debt. And regarding the debt to equity, I would say yes, debt equity is more when you are not profitable, or you, I know you're hardly profitable, but you're growing very fast, or like you're growing and you can get a debt, and it's kind of more expensive. So debt is cheaper but riskier. Equity is more expensive because you give up a share of your company, and equity is always more expensive. So yeah, I think like sometimes business owners like don't understand this. They think like, oh, I just like sell shares and I get the
Right.
money, and then I like, and the debt I need to return it and then pay interest, right?
And then when they sell, they give a ton of that away.
Yeah, but equity is always more expensive. It's just the rule. It's like it's economic rule, and yeah, you need to be also like understand like what's it gonna accomplish. I think it's important to think like a long term. What is your goal? And what is your strategy? Like you selling right now, I don't know, 10%, 20% of your company to get this money inside the company, but will you need another round? Will you need another equity round, and what you will get, like, and what's gonna be the relation next time, and like this kind of money, what's they help you to give? Because sometimes people kind of like miscalculate this. They think like, oh, I just get money, I just have this issue, I just need money, but like then they need like then they run out of the money, or they need more money inside the business like in 1 year, and then they come up again with these questions, right? And there's a, for example, consumer goods, it's a really good example. Like I've seen it so many times. It's you need, as you grow, you need more inventory. Like whatever you sell, I know, let's say drinks, you need more inventory. As you grow, you need to invest more in working capital. And what I see, especially in the very beginning, companies sell equity to finance their working capital. And it's completely wrong, because you will completely sold the entire company just finance this working capital, because as you grow, you need more working capital, not less. And yeah, again, you need to understand like what you're doing, because if it's a working capital, it's better to have debt, or at least a mix if you can get all the debt. If it's kind of like a expansion, like a big investment, and you're still unprofitable, but there's a big upside, equity is probably a better version.
No, that's such great advice. And that goes back to really what you do is helping people figure these components out and what's going to be the best avenue for them in their business for where they are. And there isn't any one size fits all. And I think that's what's so important. But to your point earlier, if a business isn't making, if their profit margins aren't there, it doesn't do any good to care about making more revenue, because it actually is going to decline, because now you've got more employees or more team or whatever it's taking to get that revenue. We used to have a saying that revenue feeds the ego and profits feed the bank account and the family.
Yeah, yeah.
So, and I think so often business owners really don't get that profits and cash flow are what drive the business, not the revenue. I've seen some incredibly profitable, a lot of the people that I work with have incredibly profitable businesses, and the revenue is not extremely high, and they're making far more than
Yeah.
business owners that are running multi-million-dollar businesses.
Yeah, and there's another thing that it's kind of like on LinkedIn or X, like a lot of like fractional CFOs, so like even accounts, they say like cash is everything, cash is the king, cash flow is what like business owners should monitor, it's everything. It's kind of like, of course, it's important. You cannot pay your employees with the profit. You're paying with the cash, but it's super important. Long term, the kind of like the main variable in your business financial is going to be gross profit margins. It's like, and actually, what I see across all businesses, all sectors, uh, gross profit margins tell a lot. Like, have you found like this product market fit? Do you have like these loyal customers that pay for your expertise, your products or services enough that you can charge this high gross profit margin? And if you have a very healthy gross profit margins, everything is kind of will be sorted out. It's harder to miss out if the business with the high gross profit margins. It means, and it's actually kind of telling you like overall about your business, that customers see your value, they eager to pay like this premium that you charge, and they don't see your service or products as a commodity. And there's so many things that you can tell just looking at one number, and you really need to work. And I think another kind of mistake that I see so many times, that people working and they kind of like, say you can sell like for the certain price, you can sell everything, right? Like we can start a business just discounting and start any business, right? Just like
Right.
discounting the service, just providing, I don't know, like
That's like a
roofing.
race to the bottom, in my opinion.
Yeah, we can start roofing business. It's just like look at the price,
Yes.
give it like a half the price. Our gross margin be like 10%, but we can grow the business, right? Like we can
Right.
grow, like get the market share and so on. But it's not unhealthy. And then you will be complaining, oh, I don't have money in my business. I need
Right.
more money. But like
Well, and you're working a lot harder too. That's what people don't
yeah,
realize, is you're really grinding a lot harder for every dollar.
yeah.
And yeah, so we could talk about this all day. So one of the things I like to do on the show too, since there are a lot of entrepreneurs and owners listening to the show, I love for them, and a lot of consultants, I love for them to see inside of other people's businesses. So how do you actually work with clients? What is sort of your process, or the way you work with your clients? Is it hourly? Is it monthly? How do you structure your services?
Yeah, I charge a fixed rate, and I'll also, when I onboard a new client, I charge onboarding fees usually,
Okay.
because
Mm-hmm.
because like two, like first 2 3 months are very active.
Right.
It's just way more work, and
Mm-hmm.
when we're onboarding, we're preparing a lot of files and a lot of reviews, and we've done a lot of work. Yeah, like I'm not charging hourly rate, and there's a lot of things about hourly rate, but I think it's dying. I think like if people realize that hourly rate is just it doesn't work. Yeah.
No, I will talk against hourly rates. You're not a taxi meter, right? You're not a taxi. No, hourly rates to me are just resistance between you and the client. And I just, people like to know what they're spending and what they're investing in so they can budget for it. And that's just the way I feel like if you think about, like, utility companies came out with budget billing years ago, many, many years ago, that was like the best thing for people, because now they knew what to budget for their utility
Yeah.
bills. There weren't the surprises. And I know that for business owners, that's just a better way to run their business, is the more they can budget and know what's going to be coming out, the better their business will be. So hourly rates don't work for most things.
Yeah, they don't work like for so many reasons. It's just
Right.
it's kind of like they don't work for clients, they don't work for consultants. It's
Right.
just
And it's a broken business model for
yeah,
consultants. Yes,
yeah,
for
yeah.
sure.
It's just like yeah, you
Yeah.
you you have a limited number of hours,
Right.
and hours is not tied to the value you deliver, and yeah, it's
Right.
just yeah.
Well, and
But
here's my favorite. This is the one I talk about a lot on videos and things like that, is if you're an expert and you can actually do things more efficiently, you're going to get paid less than a beginner who's
yeah,
really slow.
yeah,
Okay, there's nothing right about that, right? So
yeah.
I talk about that all the time too.
Yeah, there's a great book that they were doing development, like software development, and they analyze they charge hourly rate, and what they
Mm,
find out that they have the best software developer that doing everything very fast, very qualitative, like the least profitable
right.
developer for them, like because he's doing
Right.
so fast and he
Yeah.
charging less
He's
less
not
bill of
making money.
hours.
Hmm.
And the worst one, that like the slowest, like he needs to
Hmm.
redo everything, he's like the most profitable one.
Right. Yeah. What's wrong with that picture, right?
Yeah,
Yeah, it
yeah.
doesn't make sense. Doesn't make sense. So also, how do you get your clients now? What's your best way of getting the clients that you work with?
You mean like how I'm sourcing clients or how I'm selling
Yeah.
on a sales
How do
call?
you market your business to get clients?
Yeah, it's a good question. I'm still kind of trying to figure out the best source. What I find out, at least what works for me, is conferences. Like it's kind of like it works. I think it's difficult to scale other than if you're not buying like a sponsorship or something. But it works. I can tell you it works. Yeah. So yeah, it's one thing that I think like yeah, it definitely works. The other things, I don't know. It's especially it's hard I just recently started offering accounting service to fractional CFO, and I think like with the fractional CFO, because the way I'm targeting my ACP, it's like I remember recently I attended a conference, like only business owners, like 100 clinic owners plus, and out of all of them, they probably like three that my potential clients, only three for the fractional CFO. So it's just kind of like the market is really really kind of narrow because these and to find these business owners, what I also find out as business grow and it's kind of like I don't know like get at least 2-3 million of annual revenue, the business owners they kind of really focus internally, like there's so many things that happening and they kind of like explain, they hire people, they have like
Right.
strategic their team, and they don't really need to go out like other than if they fundraising, if they're looking for equity or debt,
Yeah.
like they don't really need to go out for any reasons, right? Like because they have like so many things that they need to sort out inside the business and they kind of like working with the team and so on,
Mhm.
and yeah.
Yeah. Okay. So what would be one thing that if you could change anything in your business in the next 90 days, what would that be for you?
Yeah, just get more leads.
Okay.
Yeah,
Leads or clients?
clients, but they started with leads.
A lot of people say leads, but I always say, there you can get leads pretty easy. Clients are a whole different thing, right? That it takes a lot
Yeah,
more to get
yeah,
clients, but
yeah.
yeah. Okay. So anything that you would like to say or add that we haven't talked about, and you want to make sure my audience gets this?
I understand that like the financials, it's not the first priority for almost any businesses, right? Like the first like priority to get clients,
Mm-hmm.
marketing, like ads, I know
Well, without those things, there's no financials, right? There's no
yeah,
money, but yeah.
fulfillment of the whatever like products or services you're providing for your clients, and kind of financials always like on the bottom of the priorities.
Mm-hmm.
But as you cross 20,000 a month of your revenue, you start need to think about it. It's just
Mm-hmm.
like there's no way around. Like you need to understand how much do you make, and get like like with the doctors, like you get like at least 2-3 opinions, like especially if it's important. Just get those opinions. Like it's actually whenever you go on a fractional CFO website, you can schedule a free call, and you can ask your questions. Just like it's so accessible, and I wonder why founders are not doing this. And another thing,
Do you
just
think some of it's embarrassment, maybe? I think sometimes with business owners, they feel like they should know all of this and they feel like, oh, I'm in business. I should really understand the money and I should really understand all of this. So sometimes I think it's a little bit of a pride thing, that they're afraid to admit that they
I,
don't
I don't
understand it.
know. Just I don't think they think about it. I think it's just like not the first
That could be.
priority, not the second priority. They don't really think about it.
Mhm.
Yeah, and sometimes like with my category clinic owners, it's mostly doctors,
Mhm.
and they have these symptoms of like to being a doctor, and they think they
Mhm.
know everything. And
Mhm.
yes, even I know like some fractional CFOs like don't want to work with this category of clients, and yeah, sometimes they probably can admit certain things, but I think it's a minority. I think it's just in general they think everything is okay, they think everything is fine,
Mhm.
because they have like this X person working for them and doing this, but it's not like that. It's just
Right.
and unfortunately there's not really kind of like the feedback cycle is way longer. Like if you're doing like marketing, I know you hire a marketing agency or hire a marketing person, like you can see ads like either perform, you have new leads, or you don't, right? Like
Right.
you can gauge it very very fast. Like I don't know, deliverables to your clients, you also can gauge like are clients happy or not, and you can get like the feedback, and you can understand they leaving or they repetitive. Like you can get this with the financials until you run out of the money.
Mhm.
or you kind of expand and then you find out like something is wrong. It's kind of like very long, right? And then you can
Right.
find like wrong explanations why, like to yourself, like why it's happening.
Yeah,
And
you can float money for a while, right?
yeah,
And
yeah,
a lot of them, they work off their top line. They work off their revenue. They don't work off of their
yeah,
net and their profits. So, yeah, that's a whole nother. You could do a whole nother show around that. But yeah, such good information. This is something I really want to keep talking about on my show because so many people, like you said, they just don't understand it, and especially
mhm,
if they are not typical in business owners, that a doctor, for example, they have to really learn this, and they don't know what they don't know,
yeah,
or they haven't hit that problem yet. I used to do a lot of cash flow turnarounds in businesses, and so it's like I would get called when they were desperate, right?
yeah,
But then
yeah,
we'd have
yeah,
to fix the problems that caused the cash flow issues from the very
yeah.
beginning, and
It's
so yeah,
usually
they just don't
it's usually
realize.
very late. It's kind of like when they
Yeah,
are then the,
sometimes it's almost too late. I
yeah,
have companies that I haven't worked with because it's like you really waited too long for this.
yeah, yeah,
Yeah,
yeah,
this is a dying business.
yeah.
So yeah. But well, this has been a great conversation, Stas. Thank you so much. How can people get a hold of you? What would you like to drive them to?
Yeah, my website, the Sorso, TheSorso.com. Yeah, you can
And we'll put
schedule.
that in the show notes too for
Yeah, you
people.
can schedule a call or like follow me on LinkedIn and X. I post every day about financials.
Yeah, he is on LinkedIn, so which is I think maybe
Yeah,
where we connected. I'm not
mhm,
sure,
yeah,
but
yeah.
this has been a great conversation. Thank you so much
Thank
for
you.
being part of it today. I
Yeah,
appreciate it.
yeah. Thank
Hi,
you.
everyone. Thank you so much for joining us for another episode. Make sure you like and subscribe to the show. We really want to grow the show and get it out there. I bring on experts just like Stas, and they give such valuable information that can move entrepreneurs, business owners ahead years by listening to the advice and the information that they give on the show. So please make sure that you subscribe. And until next time, God bless you. Have an amazing day. Bye-bye.
Yeah, bye. Thank you.
The content of this podcast is for informational and educational purposes only. Although I share strategies, ideas, and success stories based on real experiences, results are never guaranteed. Every business is unique, and outcomes depend on individual effort, market conditions, and many other factors. By listening, you agree that I and my guests are not responsible for your results or actions based on the content shared. Thank you for tuning in today. If you're as excited as I am about scaling up your influence, business, and bank account, then I have just the thing for you. But first, make sure you subscribe to the show. Second, make sure you share it with someone you care about, because sharing is caring. And third, head on over to join me in my next free virtual exclusive workshop, where we'll explore proven strategies to boost your business and maximize your potential. Look, it doesn't matter if you're just starting out or if you're looking to take your business to the next level, my workshops are designed for you. So head on over to expertinyouworkshop.com to reserve your spot and get ready to transform your expertise into extraordinary success. I'm looking forward to seeing you there and helping you achieve incredible growth. Until next time, make sure you're always seeking the expert in you, and God bless. Have an amazing day.